Hi, my name is Mitchell Neary. I'm a partner of MJ Business Solutions, an accounting firm in Heidelberg, Victoria. What we're talking about in this video for our latest email is how you can buy a parcel of blue chip shares but using capital protection. You cannot lose your money. If the share market goes down, at the same time. If you prepay your interest for those shares before the 30th of June, you can get a tax deduction in this financial year. Now, why is this important? Apart from the general tax planning strategy you can have by bringing forth expenses if you're going to pay for certain items from a tax deduction point of view, superannuation is one thing you can do, prepaying interest for share investment or properties is another thing. Why I like this one, and there are a number of ways of doing it, one being through the Macquarie Geared Equities Investment Fund. And there's a number of others as well. Macquarie, for education's sake, to illustrate the point, they will lend you 100% of the amount that you want to put in shares before the 30th of June. So say it's $50,000. They'll give you $50,000 through a loan, and they'll also lend you the money to prepay the interest on that for the next 12 months. So zero cash out of your pocket before the 30th of June. What that means is you can claim a tax deduction on the interest that you've prepaid and you get a tax refund when you do your next tax return. What you're doing is using the money that you would have paid in tax to pay interest on a bundle of shares. Generally speaking, we try and look for blue chip share opportunities, something in a good, strong, consistent company such as a BHP or an ANZ. Also a company that has good growth potential, but also the ability to pay consistent dividends as well. It's just a normal share investment. You'll have all the dividends in your name and you're paying back the interest on the loan. And then you'll be getting a tax refund in July or August or whenever you do the tax return based on the amount of interest that you've prepaid. The investment generally starts at $50,000, but you can do more, and that would be based on your cash flow situation and what surplus cash you might have. Also what level of assets that you'll have. As we said, it's allowing you to be with zero cash out and have an investment in shares that are capital protected, which normally goes for a 3-year period. So if the shares go up in value, you get all of that. And if the shares go down, you won't lose any money. So it's another thing to consider. Now, that's not investment advice. You will need to come and see a financial planner, which we can assist with, and they'll go through a process by working out what's the best thing for your circumstances. And then they'll give you a statement of advice which will explain how it would work exactly in your circumstances and all the ways of moving forward with it. So please come down and talk to the MJ Business Solutions team. We're here to help, and this is another really good option for you to consider to get your tax down and also build up some really great investment assets. Thank you.